That's why the market's doing what it's doing, because they're like, we don't know what's going to happen. But here's a chart I want to show you guys. This is what they call the dot plot. Okay, what the dot plot is actually where the Federal Reserve, the members of the Federal Reserve, they actually put a dot on where they think they're going to put the rates for that year. So here's what the dot plot looks like. 2025, this is Federal Reserve's officials, and if you watch that video, Steve Leisman said the Schmidt guy, he was the only one that was able to vote. So they had 3 people on the chart, but only one had voting rights, and probably only one had put a dot plot up here. So here's what this is. If you see here, this is the year, 2025. You go over through here, this is where they expect the federal funds rate to be, okay? Most of them right now are saying it's going to be between 3.5 to 3.75. So where is it now? Well, let's get over to this right through here. It's 3.75 to 4. Well, that means most of them expected another 0.25% cut, and the last meeting is in December. Well, here's the problem that we face right now. If you go over to this, well, right through here, in 36 days, the Federal Reserve, they're going to meet, and hopefully by then the government is reopened, because I think just hunches it's going to be resolved this week. But what are they going to do at the next meeting? Well, this number's changing quite a bit. If you go down through here, the probabilities of a Federal Reserve rate cut at the December meeting, it was like 95%, and just a week ago. What is it today? 65%. That's why the market's doing what it's doing, because they're like, we don't know what's going to happen. We know inflation's up there, and the Federal Reserve, they're kind of okay with it as long as the jobs market is deteriorating. And why is all this important? Well, this is really the reason why the Federal Reserve was created. They have 2 mandates, meaning they were created to solve 2 problems. One was the jobs numbers. Anything under 5% on this, the unemployment rate, is a full jobs market. Now they're saying, okay, over here on the inflation numbers, we'll accept the inflation numbers at 2.7. Yeah, it's over the 2% we want, but this is what they're really looking at. So if this number comes in good, the Fed isn't going to cut. If this number comes in bad, they're going to cut. But more and more the Fed officials are saying, we're going to be a little more cautious than we were in the past. That's what's making the markets do what they're doing.